All right, good morning. Coming to you live from Nasdaq's global headquarters in Lower Manhattan. Welcome to the Tuesday edition of Nasdaq Advisory Live, brought to you by Nasdaq Corporate Solutions. And I'm your host, Will Briganti. And joining me today is my guest, Massud Ghaussy. Massud, great to have you back.
How's it going, Will?
We're doing well. We're going to talk about three topics today. We're going to talk about earnings, we're going to talk about the US dollar index, and we're going to talk about GDP. So let's get started with earnings. Since the last time we spoke from last week, any updates?
Yeah, so over 60% of S&P 500 companies have reported earnings so far. Mm-hmm. Apple will be reporting earnings today after the market close. Obviously, a lot of eyes on Apple because it's one of the biggest companies in the world.
Right.
In terms of EPS growth, earnings per share growth, the number has been revised up to about 11%. If we exclude the energy sector, it's around 8%. Mm-hmm. Technology sector and financials are delivering the biggest gains in terms of EPS growth. Utilities is the only sector in which we're seeing negative earnings growth. Mm-hmm. PE, which is price over earnings per share, the most basic valuation metric, is at 17.9 times. Continues to move up as the markets are hitting fresh highs. Historically, again, depending on the look-back period, we're looking at average PE between 15 times to 17 times. 17 times if we include the dot-com bubble. So just purely based on this metric, one can claim that the markets, equity markets, are overvalued.
Okay.
In terms of both top line, which is revenue, and bottom line, which is earnings per share, growth has been far outstripping analyst expectations. And finally, the reason why we're seeing such robust, strong earnings growth this quarter relative to Q2 2016 is we have a weaker dollar, we have stronger consumer spending, and we have a lot of cost cutting that is going on. So those are the tailwinds that are delivering strong earnings growth. And finally, one last point, interesting tidbit. If we look at earnings calls, relative to Q1 2017, the mention of President Trump and Trump administration, as per the research firm Centio, has dropped by over a third, implying that essentially policy and politics has kind of moved to the background, not as relevant as before. So yeah, in a nutshell, that's what's happening in the with respect to earnings.
And that could be common as like corporations digest a new administration turnover. So we'll have to, actually that would be kind of interesting to take a look at sort of between the last administration and now. But that's for another time.
Yes, absolutely.
Okay. All right, so switching topics to the US dollar index. It seems that the US dollar index is not performing as well year to date as it has in the past. Any comments there?
Yes, so the dollar is down 9% year to date. If you may recall, second half of last year, the dollar outperformed all other currencies. If we look at the ticker DXY, which is the dollar index, it's essentially the value of the dollar against a basket of other currencies. Other currencies mostly being the euro, Japanese yen, and British pound, and the Canadian dollar. It has been underperforming all of them. If we compare the dollar against 16 other currencies, it has been underperforming. The reason behind that is the growth narrative, again, a theme that we've been discussing over the last 2 months, is being called into question, especially with the healthcare bill not passing. The question next is, will Trump be able to, through Congress, legislate tax cuts? Okay,
and so speaking of that growth, let's talk about GDP. Last question.
Yeah, so GDP figures came out on Friday. Quarter one was revised down from 1.4 to 1.2%. Second quarter GDP slightly fell from expectations at 2.6%, whereas 2.6 may come across as a strong number if we look at historical GDP growth rates, historical being from 1947, so post-World War II, you're looking at average GDP growth of about 3.2%.
Okay.
So growth over the last 8-9 years has been anemic, has been subpar. And every effort currently, as per the administration, is being undertaken in order to accelerate growth. That remains to be seen if we can head to 3.2% or higher growth.
Okay. Well, Massud, we'll leave it there. Thank you so much for that terrific insight today on all the happenings going on with corporate earnings, the dollar, and GDP. I appreciate that.
Great. Thanks so much, Will.
All right. Thank you. And to all of our viewers watching on Periscope, thank you so much for joining the Tuesday edition of Nasdaq Advisory Live. We'll be back here Thursday, where we're going to discuss community banks with Jason Peters from Nasdaq Advisory Services. Until then, have a great day, and we will see you back right here on Twitter Periscope on Thursday, 10:30. Thanks so much for joining Nasdaq Advisory Live.